And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the market prep for February the 3rd. Happy Friday, everybody. We certainly have some challenges in these markets this morning, don't we? It's going to be an interesting, challenging, and hopefully profitable trading day. My name is John Hoagland. Thanks for trusting me with your time. If you're already in the markets, hopefully you've done things well and have things going your way. But as always, we're focusing on accurate context here, thinking about risk management first, and always remaining patient in our trading. And I have to remind myself on days like today, days that I'm able to remain patient are usually better days, especially on days like today. So the unemployment numbers are out. The unemployment rate dropped to 3.4%. I've just been reading that's the lowest since 1969. The non-farm payrolls, last month they were looking at 223 additional jobs. They were looking for 185 additional jobs, 517,000 additional jobs last month. Previous on private non-farm payrolls, there were 220 additional jobs, 190 expected this time, 443,000 additional private non-farm payroll jobs. So the numbers, shockers this morning, markets already underway. We've got the equities, S&P's down 1%, Nasdaq down near 2%. The Dow, which has been lagging behind, is lagging behind to the downside as well, only down about 0.5%. We got gold down 1%. We still have more economic information due out today in the form of the PMI composite final, and at 9 o'clock, probably more impactful than the 845 number central, 9 o'clock, the ISM services index. So we still have some more information coming out. But when we think about, lower inflation should be a good thing. It's all in how investors are going to look at this and digest this information, and probably more importantly, how the Fed is going to look at this. Is this inflationary? That's my question. Weak tech earnings yesterday have also thrown shade over the recent equity futures and stock rally. Recent stock gains prior to today's unemployment numbers, especially. Crude prices have been somewhat idle overnight at weekly lows, probably seeking data of Chinese demand and a looming ban on Russian petroleum products in Europe. VIX still looked a little bit lower this morning after the number came out, 18.22. This is the last time I checked, but we got a big surge in the dollar index, up about 0.5 point after the number came out, 102.30 last time I checked, and a big spike in the yield in the 10-year, also 3.48%, about 50 basis points from where it was earlier. Let me take a look at this here again. Earlier, the yield on the 10-year was down below 3.4. No, maybe about 10 basis points, 3.4. Now it's up at 3.5%. Not 50 basis points, I apologize. 10 basis points. So, yes, I think that there's going to be a lot of speculation that this is going to be viewed as inflationary. We just had the FOMC meeting this Wednesday. We've got 6 weeks to wait till the next one, and we'll see how things pan out before then. But the Fed is keeping an eye on this, and if it's viewed as inflationary, they may change their stance a little bit, and I think that investors are already kind of digesting that information. We've got the NASDAQ down over 2% now. The Dow down 0.75%. Things are looking like we've topped out here, at least for the time being. As always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome here on the Market Prep. Subscribe to our YouTube channel. You get notifications when we do go live. We got some new things coming up, some changes coming, and we hope that you like them very soon, hopefully sooner than later. We're going to be working on a few things. And so it is always a pleasure to see you. It's always a pleasure to spend time with traders. I love trading with traders. The Rooster, again, first in the room, crowing early this morning. You win the prize, Rooster. Caprice 101, Rob T, Spencer Rhodes. Market down on a good employment number. Silly market. Scott saw and he conquered. Caesar, Charles March, good morning. Anything can happen for sure. That's one of our acronyms here. ACH, anything can happen, and that is for sure. Terry King, Alejandro, good morning. Shaw, good morning. Don. Spring has arrived in southern Florida, 80 degrees today. Well, it certainly hasn't arrived here yet. It's 1 degree. So if you're in Chicago or you're out on the East Coast, we've got just a couple of days of very cold temperatures, and then it starts to warm up again. But if you're outside, make sure you cover your skin. Make sure you look out for your pets. Pet paws can get frostbite just as soon, just as fast, and maybe even faster than we can get frostbite. So look out for your pets. Don, you enjoy that 80-degree day today. Might be a good day just to go play some golf or go hang out on the beach or something. Vince, my guy, good to see you this morning. Steven, Serenity Trader, good morning. Kevin Laffey, good morning. Andy, Octorap's going to be a great day. Let's go. Bear goes long. Bear passed the 50K Step 2 trading combine yesterday and is getting funded. Congratulations, Bear. And also, happy birthday. Boy, that's a good 1-2 punch for you there, right? That's great. You enjoy this weekend. You treat yourself well. You've worked hard at this. You deserve it. And you should celebrate. And then by the time Monday comes or when you get your funded account, make sure your feet are back firmly on the ground and dance with the one you brung. You did it. Keep doing it. Very happy for you. Bear goes long. Anthony Bell, good morning. Philip JT, good morning. Orion, good to see you this morning. It was good to talk to you a couple of days here. Will, JT, Sean, good morning. Nasdaq, Marcelo, Will. Yes, very inflationary is what I'm feeling here as well. Dan Trader, good morning to you. It's a good week all around for Dan Trader and his brother. We're continuing to pray for recovery for your brother, Dan. Caesar, Great Dane. Rusty Golfer, my spirit animal, is here. Kevin, good morning. Sarah Hall, prayers and love and cheers to you as well. D-Beep, how is payroll numbers off by, right? That's crazy. Crazy. In Toronto, it's negative 21 Celsius today. My goodness. Jules, good morning. Trading Research. Travis, good morning. Kevin, apparently number may be skewed by workers returning from some strikes. There's always those underlying things going on there. The year of the bear might begin today. There you go, Kevin. Varga, UC Martino, good morning. Sarah Hall, saying congratulations to Bear Goes Long. If you're new to the market forecast, market prep, I should say, welcome. I see a couple of names I maybe haven't seen before. Thanks for chiming in and saying good morning. And again, hit the lucky like button. It's lucky. We'll see how that plays out for us all today. I wore my rally sweater again today, even though it's more about hope than belief at this point, but we don't know what's going to happen. As we always say, ACH, anything can happen. Stay tuned to As the Market Turns. Will the S&Ps recover today? Will the Dow and the Nasdaq fall apart? Stay tuned to As the Market Turns. All right. Perfect rejection on S&P at the 100-session moving average weekly chart yesterday. We're seeing excess on the daily chart as well. We're going to take a look at that here very shortly. It's Friday. This is the last broadcast for the week. I hope it's been a good week. I know we had some very good group coaching sessions, some very interesting make whole money sessions, and it starts all again next week. So when you're done trading today, just wrap it up, do your homework, of course, wrap it up, and then have a nice weekend and get some good rest, be kind to yourselves. And let's jump into the charts here right now so we can have a look and see what's going on here. So this is the daily in the S&Ps. Look at the volume yesterday. We had high volume in the New York Stock Exchange as well. So while the auction process is still good to the upside, we have some pretty decent excess on the daily chart here at the high. All right. We see excess down here. We saw excess down here. We see excess here. We see some decent excess on the daily chart here. We still had an overlapping to higher range and value on higher volume and higher open interest. There were still buyers coming into this market through part of the day yesterday, and I think that at one point when we put in the high, those buyers said, okay, we're done. Today is non-farm payrolls, unemployment. Anything can happen. So far early, we had some possible support at weekly kickoff high that is now fallen. It was kind of supportive overnight until the numbers came out. But again, upside structure remains. But have we exhausted the buyers for the time being? Do we need a pullback to continue this push to the upside? Lots of speculation and chatter about, this is the continuation chart, about us taking out this trend line, about the crossover of the 50 and the 200 session moving average. That's a golden cross, I think they call it. They call it the death cross on the downside. They call it the golden cross on the upside. So there's a lot of speculation that our lows may be in, at least for a while. But, there's always gyrations, and markets can't go one direction all the time. Here's the 30-minute chart. So while we had negative delta throughout the day here, we had the continuation on Wednesday to the upside, continuation on high volume, and an increase in open interest. But the fact that we were unable to hold these highs, that we have that long shadow on the daily chart, marks potential excess, and now we're starting to see price moving in the opposite direction. There was no real overnight inventory until now. Obviously, we've got some shorts coming into this market, moving price lower. Take a look at how volatile that last hour of trade was yesterday after the tech earnings came out. We tested up almost to the high. We tested up almost to the low. In the Nasdaq, we extended the high and the low in the last hour of the extended trading hours. That's after the cash close. All of that happened. It's always going to be on lower volume. I just find it interesting that the market whipsawed in both directions. But I think we've got a pretty good idea of potential rejection of higher pricing. When we look at the Nasdaq, we had a gap to yesterday's range. If we gap below that, it's going to leave an island top in the Nasdaq, and that's usually not a positive sign. Looking at this earlier, where we were before the number came out, we were looking at possible potential repair in the profile from yesterday. Speaking of profiles, let's look at the TPO chart here. So the late spike, opening above the late spike, that's acceptance of higher pricing. Now we're seeing coming back into the late spike from Wednesday. I could see a move back down to the base of this late spike from Wednesday. I don't know if that's going to happen. Nobody does. I'm going to try and stay patient and just wait until the market gives me something I can lean on as far as risk is concerned. And I'm going to be patient. I'm very excited about the trading day today, as I'm sure most traders are. It looks like there's going to be big opportunity, but I remember also that also means risk. Yeah, the dollar is screaming to the upside, isn't it? All right. So yesterday we had the initial balance, the low of the session. Normal variation normal variation day extreme. The points of control were in the upper half of the profile. We saw that the excursions to the upside here left excess on very low volume. I was talking to somebody yesterday about how auctions die. They die in excess. We have an excess high here on the daily. We also have an excess high in this profile. We also had excess at the low, but what are we doing now? We're rejecting value up at this level. Try and remain patient. I want to go back to the 30 here for just a second. There it is. Now, this weekly kickoff high, resistant, supportive. We're back below it. Is it going to be resistant? Does that give us an opportunity? Take a look at crude oil now. So we've got 2 points of contact basically off of this. We could possibly move this up here. Then we're going to have more points of contact here. So we are coiling. There we go. 4 or 5 points of contact on this lower bar, 3, 4 points of contact on this upper bar. This market is coiling. Not only is it coiling on the charts, it's coiling in open interest. We added another 24,000 in open interest yesterday. That makes 311,000 since the beginning of the year. Since January 1st, we've added that much. Well, since January 3rd is the first trading day, we've added basically 21% increase in open interest from where open interest was at the beginning of the year, added 21%. There is a lot of, you'll pardon the pun, energy in this market. And when there is a change in this market, it is going to provide a very large opportunity. This is my speculation. This is my hypothesis. There is no proof of anything like this happening. I've just seen it before. So we have a whole lot of energy here. We're bouncing along this trend line. Lots of questions as to how much demand China is going to bring to the market as they open up their economy. Lots of fundamental information out there. I'm going to trade what I see. This is basically same as range-bound rules. We fade the extremes until there's a breakout with acceptance, and then we go with those breakouts, whether it's to the upside, whether it's to the downside. I'm fascinated. I have not been actively trading crude oil, but I'm fascinated to watch and see if we do get a big move once there is a fundamental change in this market. It's going to be kind of a hair trigger when that happens. I have a feeling something big is going to happen in the pork belly market today. I knew it. No, there's something going on here. It ain't exactly clear. 30-minute, no overnight inventory. We get a little bit of a spike as the dollar pops. Overnight low right on that daily trend line. So I'm going to be watching to see if there's anything that I can do down here. If price brings us back down to that level, it would be a buy until we break out and accept below it. Inside value, patience. We are inside value from yesterday. So is there really a major change in the perception of value so far today? want patience and I want it now. So yesterday, no initial balance extreme in crude. We've looked out both sides, which does tend to make a market become rotational, which it was. Normal variation day with a weak high and a strong low, excess low, weak high, right down to that trend line. Remember this our overnight low brings us right to that trend line on the daily chart if we get that opportunity. Right now we're in range and in value. The nuances, this is a normal variation, sort of extreme day. The center of the range is here, point of control, settlement, all of that a little bit higher here, 75.88. So we didn't really settle on the highs, but most of the time, and the directional activity yesterday with a poor high was to the upside. Again, we're in the middle of value here. We got to stay patient. Take a look at the Nasdaq now. This could be ugly. That poor Nasdaq. Upside structure does remain. We added 2,600 in open interest yesterday on high volume. The auction looked great yesterday, but it left all that excess at the high. That's one thing that's a little bit scary. Of course, anything can happen. It's unemployment day, and we have a lot of digestion of this information today. 30-minute chart. Gap away. If we can't close this gap today, it's going to create an island top. And an island top is a very strong reversal signal. Doesn't mean we're going back to the lows, but it just means we're going to probably be looking for opportunities to sell strength until something changes. Look at the range from yesterday. We had excess low. The low is, of course, the initial balance low. Relatively weak high on the daily chart, on the 30-minute chart and the profile, but again, excess on the daily chart. Look at what happened after the close when those earnings came out. We put in a new high and we put in a new low. A little kind of decent volume here, not tremendous, but it's kind of strange, right? So we've got overnight inventory that was a little bit long. It's now been reconciled. Now we're starting to look a little bit shorter, and we are going to be, with good probability, opening with a gap. So here's the gap higher above the late spike. Here, if we open here, we're going to create a spike from yesterday's range, a gap, I should say, from yesterday's range. If we can't close that gap, it's a bad sign. It's a bad sign. Normal variation trading day. IB extreme to low. Some kind of toothy anomalous stuff up here that might look to be cleared up a little bit at some point in the future. But again, I'm monitoring to see if we create this island top up here, because that's, again, usually a bad sign. Take a look at gold. Gold is just getting whacked with the dollar. Holy smokles. So this is a potential market state change. Upside structure is now broken. We lost 10,000 off the high yesterday on good volume. Okay, we remember this. April is now the front month, so it doesn't show a lot of volume in the past, but this is good volume. We had some long liquidation yesterday. We can even see it on the 30-minute chart. B shape profile, long liquidation, supported by the drop in open interest. We just could not hold above last week's high. Now we're testing below this week's weekly kickoff low. That is a potential market state break. We are leaving the balance area. We accept below this. that means that we're looking to sell strength for the time being. Here's the TPO chart. Initial balance, neither high nor low. Well, yeah, actually, it's the high from yesterday. Basically, the market drove from above the balance area back into the balance area, through the balance area, and is now extending below the balance area. Here's that B shape indicating long liquidation, which in the right situation can take selling power away from the market. But with the U.S. dollar screaming, we're seeing the gold get crushed here. Take a look at the euro, which is also not necessarily breaking market state here just yet. We were testing above weekly kickoff high here in the euro. We failed to hold above it yesterday. Again, losing open interest of about 9,700 on high volume. So this is a pretty decent bearish piercing pattern. Okay, if you're looking at candlesticks, this is a bearish piercing pattern. Now we're seeing the continuation of that. We've got to get down below this trend line to begin to break state, and then below weekly kickoff low to truly break state. We got a lot of changes going on here. Last week's low is now in play. We see the market. Opening in range and value. The dollar screaming, of course, is taking this market lower. We see the B-shaped profile here also. Here's the TPO chart. Long liquidation, normal variation, extreme day, B-shape, long liquidation, seeing continuation to the downside. The market got so thin we skipped a whole bunch of prices, and we did that in gold as well. So there's a pretty good move to the downside here. 10-year, look at that. The 10 years yield rises 10 basis points, and wacko. We are unable to show signs of acceptance above weekly kickoff high. Now we're back in the area of balance that we've been in for 3 weeks. Maybe heading back towards a little short time frame control. We did add 3,200 in open interest on an attempt to move higher that failed. We have excess on the daily chart. We have the 30-minute chart showing excess on that as well. The market 2 days in a row attempting to get to and hold above weekly kickoff high, which it failed to do. Settlement was down here at 115.15 and a half. And pow. Whoa. I keep cracking myself up when I say that. Pow. Whoa. No, this is, of course, the unemployment numbers. That was quite the shock to the system, ladies and gentlemen. It is going to take time for this market to digest what that means, and I'm sure it's going to take time for the Fed to digest that as well. Initial balance high is probably going to remain the high of the day today, cleaning up some potential naked points of control down here. And then I think this market falls back into short time frame balance. I mean, look at this on the daily. We're kind of right back inside of this area of balance. You take a look here and see what happened in the natural gas. Just continues to just push to the downside. I mean, there's a little uncertainty here, maybe starting to get to a little bit of uncertainty here, but the downside auction is healthy. The downside auction is healthy. Gap rules, of course. Here's the 30-minute. No real overnight inventory. Just continuing to wander to the downside. No IB extreme. Market attempted to go higher. Left excess at the high. B-shaped. Just kind of sellers winning throughout the day yesterday. You can see where the point of control was up here for a little while, then it moved down here, then it moved down here, and then it continued to move lower as range extension came in. And here we are, looking to accept below value. Here's the, that's about it there. So again, I just want to remind everybody that yes, there is great opportunity in these markets today. I'm going to, kind of remember that if I get over my skis, if I get ahead of myself, I'm going to probably end up over trading. And in my experience, over trading on days like today don't really benefit me. So I'm going to stay patient. I'm going to tell myself right now that I'm going to probably miss some opportunities today. And I have to be okay with that. I'm going to let them go. I'm going to just focus on what I'm seeing, what the market is trying to tell me, and then I'm going to stay and wait until the market says, this is a good opportunity, because you can lean on something cheap for this trade. And if it goes your way, this is going to be a good trade. So, our equities were not even open yet. Let's see how these markets open. Be patient looking for your opportunities. And, at the very least, Fridays are always capital preservation days. If things don't go your way, relatively early, if you're patient, if you're looking for the right opportunities and they're not playing out, I know I tend to get my switch flipped if I've had 3 consecutive losses. If that's the case, then I know I'm probably going to become emotional, and it's going to be difficult for me to make good trading decisions and when I'm becoming emotional or angry. So I have to let that go. I have to take a walk. I have to go outside with the dog. I have to have a ham sandwich, a glass of milk, something to bring myself back to center, get rid of the venom so that I can see the market clearly through that way. So, hey, Kevin Laffey's telling us he's got a friend, John Rowland, a former NYMEX Nat Gas trader. We'll be talking about Nat Gas and the market at 2:30 today on Bar Chart's YouTube channel. Check out Bar Chart's YouTube channel. It sounds like a good idea, especially if you are trading or interested in the natural gas market. All right, let's take our deep breath. Humble, grateful, creative, and centered today. Just take it easy. Remember Capital Preservation Friday. There's no reason to get all banged up today. Be kind to yourself. I think it was with Great Dane. Congratulations. No, that was Bear Goes Long. Congratulations. Enjoy the weekend. Celebrate. Everybody should celebrate. I mean, we work hard at this. Be good to yourself. Do something nice for yourself. Even if it's just a walk in the woods. I always enjoy that. And be kind to others, of course. Say a prayer for peace. Remember the blessings that we all have. Have a great weekend. Have a great trading day today. Hopefully it's going to be wonderful for all of you. It's our goal here is we are looking forward to all of your success. And hopefully we can do that. Hopefully we can do that. It's in all of us. We all can do this. It's just a matter of getting to know the markets and, even more important, getting to know ourselves. Have a great trading day. Have a great weekend. I'll see you Monday morning, 7:45, same bad time, same bad channel. Get out there, manage risk, get out there and profit today. Trade well, and I'll see you Monday. Have a great weekend.